Well, hi folks, welcome to the members, and I'm going to go through the charts very quickly, unscripted, unedited, so it might be a little messy and choppy, and I'm going to try and do it quite quickly. So we've got the Forex majors here, the euro, the pound, the dollar yen, and a couple of the yen crosses, and the DXY. DXY is super interesting. Overall, I think it looks bullish. It's a clear bullish pattern. We've broken out of the downward trend line. We had a consolidation period, bull flag. We've now actually met the technical target of this move, and we're at the 200 period moving average and holding below it. So pretty crucial. We've got a 50% Fibonacci above us at 104. And then we got the 104.80, which is the 618. I think that's the most crucial level. But above that, we've also got resistance up into the 786 fib area and these previous swing highs and this area of supply and demand. So technically, we could have a move up into that area on the dollar index, and that would take us to 78.6. And if it did turn around there, it would be a much more dramatic and rapid turnaround. So let's see how we go. I'm not putting any big bets on the dollar either way at the moment, but we do have a bet on the dollar yen, and I'm treating that completely separately. So dollar yen, we are short, looking for this to move down, and also the Swiss yen. Swiss yen's interesting because we've broken down beneath this very short term and narrow channel. So it's not that significant, but we have broken down, showing some sign of weakness. So let's see how that one goes. So we're short on dollar yen, Swiss yen. Going back to the dollar yen on the daily chart, you can see we've reached the underside of this supply and demand zone. So it's also around 78.6% fib. So we could get up there as well. And there's nothing to say we can't go higher than this recent high a few months ago. Right, going across the stocks, tricky one. A lot of people are long, a lot of people are short. I think it's still fairly equally balanced. So we don't have a clear direction on this, apart from the fact that the charts are moving dramatically higher and have continued to do so. However, I think we need to pull back. My idea for the stock markets in general, and there are individual names which will be different, is for a pullback this year and then a rally as we move towards elections and possibly a rate cut. I don't know how this timing is all going to work out, but we'll figure it out as we go along. There's the all-time high on S&P. We've broken through. We're above the all-time high on NASDAQ. And looking at the NASDAQ day chart, we're probably going to have a gap up again today. So that'll be 3 gaps, which means that we're in danger of a sudden capitulation. A couple of interesting names on here, AMD and NVIDIA. AMD has broken out of its last chance to really fall back. We do have a small short position on here. I'm not sure if that's going to last. It should have turned around there at the underside of that channel. However, when we look at its big brother, NVIDIA, look where we are on the chart, and you can see the pre-market prices here at the moment. There's the pre-market, more or less where we are at the moment. There's the long-term channel on the weekly chart on NVIDIA. We've now reached the underside of it. Let's go to the day chart. So whereas AMD just forced its way back into the channel, NVIDIA is still below. And we're looking to short NVIDIA between 595 and 600. We don't have a position on that just yet. We've got nothing on Apple and Tesla and so on. Not much to say on metals, except that we're still long on gold, and I like the way the structure is forming. I think we could see a little bit further of a dip, but I hope not. I'm allowing for dips to below 1900, but I'm hoping we don't have to allow for that, if you know what I mean. But so far the structure looks reasonably good. And then the last couple of days, Thursday and Friday, we had a reversal type of pattern that's not convincing at this 50-day moving average, and we're above it still at the moment. And although we dipped below it, we're back above it now. So let's see if we can go with that. Nothing on silver. I don't like silver. Looking weak again. I pointed out in my last video, this looks awfully like a head and shoulders, and the target for silver is probably around $20. Maybe slightly higher. UEC and URA, I'm looking to buy into dips. The horizontal lines on these two charts are our buying levels, so take a look at that. You can pause and check out the numbers. Going to commodities, and particularly natural gas. Before I get to natural gas, let's just go through some of the others. We've got a long position on soya, and to make sure you don't miss any further videos, please consider subscribing to the channel. Go and check that out on X. Bear in mind on soya that there are a couple of paths we could follow here, and we're aiming for this is the first try. Second try and third try will be much, much lower down. Cocoa. This is not London cocoa. This is US cocoa. We're short. Wheat, we've talked about. We have no position on wheat. I think we could get a lot lower on wheat. We're watching that closely. WTI, we have a long position on this from quite low, around about $70. That's at 73.50. So far, so good. My strategy for WTI looks something like this. And if we do get a rally up into this red zone, I'll be looking to reverse this trade on a signal and go short for a move down into the 60s and maybe 50s on WTI. And now we can talk about natural gas. So here we are, right at the bottom of the channel again. Let's remind ourselves of this long-term channel, and then I'll show you one or two other things quickly. And once again, please go and have a look on X, because I put some charts up on there as well. Zoom into those on X and check out the charts with more detail. We're at the bottom of this channel. So it's obviously a natural buying zone. This is a weekly channel. It's a long-term weekly channel. And if I zoom out, you can see a couple of things. The software that I've got on the chart shows these two support zones. Really good software. And if you've got TradingView, look for that indicator, put it in. It basically just does what you could do manually and just draw in the areas of supply and demand and support and so on, but it does it automatically, which is pretty cool. You can see the two levels there. Pause and have a look again. These are the two crucial support levels. We're at the bottom of the channel. We're oversold on the 1 hour, on the 4 hour, on the daily chart, and even creeping into that territory on the weekly chart. So go across to X and have a look at some of these charts. I've got some Oanda charts on X as well, which are pretty interesting and important. I've taken a long position on Oanda at $2.40. I'm not trading the futures contracts. The Oanda ETF is a kind of a hybrid mixture made up thing based on the front month and other futures contracts, and I think the spot price. But if you look at the Oanda chart, we've broken down through this very key support level at around 2.5. I've been speaking about it for a year and a half now. We dipped below it, we broke up, rallied strongly, and we're dipping below it again. What I've noticed on this chart, we've got an expanding pattern. You might call it a megaphone or a broadening pattern or broadening formation. And normally the tops and the bottoms of this sort of formation are critical areas. The top of this pattern on Oanda is at around about the 3.8 level, and the bottom of this pattern at around about the $2 level. And that gives us our range. Most natural gas traders seem to be perma bulls. Whenever the market drops, there's an outcry, everyone goes crazy, there are Twitter wars going on, and everyone loses their money. That's because natural gas traders tend to be perma bulls. In other words, they continue to buy when the market's high, they buy when the market's low, they just think gas is going to go up and up and up. If you look at the long-term range over years and decades, the general average range where natural gas spends most of its time is between $2 and $4. Coincidentally, the top of this megaphone and the bottom of this megaphone. So we've started to edge in on Oanda. I'm not trading the futures because they're not flexible enough. We've got rollover coming on Friday, and I have no idea what's going to happen leading up to the roll or after the roll. But I can trade natural gas on Oanda because it's a continuous price. It's an ETF based on the front month, other months, spot prices, all that sort of thing. So it's a kind of a weird instrument to trade. I just call it a made-up instrument. But as the famous Robert De Niro said in Meet the Parents, you can trade anything with nipples. No, he didn't say that. He said you can milk anything with nipples. You can trade anything with a price. And this Oanda chart is actually structured more beautifully than the futures charts. It would be because it's kind of smoothed out by the averaging of different contracts and the spot price. So it gives you it's almost a better picture, even though it's not a real number. In any case, you could trade natural gas at Oanda. You could trade one contract, which might move 1 cent if the price moves $1. Or you can trade thousands of contracts. So just to remind you, I've just taken a long position at $2.40. It's a 10% size position. Very, very small. And I have less than 0.5% risk on this position. If we move down to $2.20, I'll take another 10%. If we move down to $2, I'll add on another 20 or 30%. So that's my strategy for natural gas. I hope that helps you. And for those of you who are losing, just remember, gas is a ranged product like many commodities. You trade from the top to the bottom to the top. And most of the time, 60, 70% of the time, natural gas will be ranged between $2 and $4. One more currency that I want to point out as we close is the South African Rand. I've got the US dollar, South African Rand, pound South African Rand on these charts. We're long on these. I'm always long on these, whether physically or electronically. And I have long-term trades on these from much, much lower down and some more recently. And what I really like on the pound South African Rand chart is this breakout of a multi-year consolidation pattern and trend line. If you're interested in trading the pound rand, look for dips back down to this trend line, possibly even down to the red line. Allow for a move down to the moving averages. That's at around about 23.20. And then we should be good to go to new highs. Take care. Speak to you soon.